Hello friends, welcome to the YouTube channel of FinSim. My name is Raghu Kumar, a certified financial planner and founder of FinSim. Through these educational videos, we are trying to simplify the complicated world of personal finance for you. In this video, we are going to be discussing about home loan insurance in detail. Before we proceed further, a quick disclaimer. This is strictly for education purpose. Any company names we might mention is for reference purpose only. Please consult your financial planner before proceeding with any purchase. Views expressed in this video are based on our personal experience and analysis. Owning a home is a dream which most of the individuals have. If an individual were to buy a decent 2 BHK property in Bengaluru, he or she should be ready to shell out anywhere between 70 lakh to 1 crore, depending upon the location and amenities provided by the builder. Considering the high cost involved in purchasing real estate, most of the home buyers opt for buying property through home loans offered by either banks or NBFCs. Let's try to understand now what is home loan insurance and why is it required. Home loan is a long-term liability which an individual takes on while buying a house. In majority of the situations, individuals decide on which property to buy based on how much they can shell out for down payment and registration. Most of the banks offer to provide a loan up to 80% of the registration value, which means the buyer of the property will have to pay 20% of the registration value and about 6% of the registration value towards registration charges. For bank, it is a secured loan, as the property purchased will act as a security for the bank. In case the buyer is not in a position to pay the EMIs on a timely basis, banks can acquire the property and auction it in order to recover the outstanding dues. Now, let's assume a situation wherein the buyer of the property is the sole breadwinner in the family and he succumbs to an accident. Surviving family members might not be in a position to afford payment of EMIs, which would result in loan default and bank proceeding with the auctioning of the property to recover the loan. In order to avoid such a situation, property buyers can purchase an insurance on the loan amount. It can be bought either from a general insurance company or life insurance company. In case of an unfortunate event of death of the property owner, insurance company would pay the outstanding loan amount to the bank and surviving family members of the property buyer would not be financially burdened. One can buy this cover either by paying the premium in one go or by paying premiums on a yearly basis. Amount of premium which the insurance company is going to charge will be based on multiple parameters like loan amount, age of the home buyer, medical history of the buyer, etc. If an individual has plan of prepaying the loan, it's advisable to opt for yearly premium payment option as the premium will be based on the amount of outstanding loan. And if the home buyer pre-closes the loan, then he or she can stop making the premium payments. Do not confuse this insurance with the home insurance, which primarily provides indemnity in case of damage or destruction of the property due to various reasons like fire, floods, earthquake, etc. As we discussed earlier, for banks, these are secured loans as loans are given against the property. However, if the property gets damaged and home buyer doesn't repay the loan availed, it will result in bank taking a hit in their P&L account. In order to avoid this situation, bank mandates that the home buyer availing home loan should mandatorily take home insurance to safeguard their interest. In our opinion, home is the biggest investment which an average individual makes in his or her lifetime. Considering this, it's in the interest of the home buyer to buy home insurance whether the property is taken on loan or not. Alternate approach to cover this risk is to increase the term insurance cover of the property buyer to the extent of the loan availed. If you already have a term insurance and if the cover available is more than what is required for the family in insured's absence, then the home buyer can consider the excess amount as cover for home loan. In this approach, one should calculate the ideal insurance coverage accurately. You can also use our proprietary insurance coverage calculator to find out the ideal term insurance coverage which is required for you. Link for the same is provided in the description box of this video. While it is not mandatory by law to buy a home loan insurance, most of the insurers push the end customers to buy this as part of their cross-selling agenda for increasing the revenue of the bank. It is up to the customer to evaluate the requirement and take a final decision. Who would not want to avail tax exemption on the premiums which they are paying? Any premium paid for home loan insurance can be deducted from their taxable income under Section 80C. If we had to summarize the whole video, safeguarding one's family's financial interest should be their top priority. Always buy home loan insurance or at least top up your term insurance policy. Do not opt for single premium payment option. Buying a home insurance is a wise choice even after the home loan is cleared. Hope you found this useful. If yes, please do share it with your friends and family. Please do reach out to us for a free consultation on how you can achieve your financial goals.